Alright guys, welcome to another video. This is Candlesticks, and we're going to be starting technical analysis series today, and this is going to be the first video. In this video we're going to be focusing on the science of candlesticks. So obviously we can't cover everything in one video, so we're going to be taking it part by part. So in this video we're going to be going over candlesticks. So if you have already gone to TradingView, you see these charts, and I think this is one of the most confusing things for traders. They see these charts, all this up and down, and they're like, I don't understand what's going on here. So each of everything you see here is made up of candlesticks, right? So you see these over here, from here to here, it's a candlestick. This is a candlestick. This red is a candlestick. This is a candlestick. This is a candlestick. So this is a chart, right? And a chart is composed of candlesticks. So I'm going to be heading over to my TradingView to show you some illustrations that I did. So let's head over there. Okay, so the science of candlesticks. Now every candlestick has these key features, right? Every candlestick has a body. So in this case, right, this part from here to here is the body of the candle, right? So why this part is called a wick or shadow. So let me just add that. So wick or shadow. So either, but it's more people normally refer to it as wick. So we have two types of candles, right? So this is called the bullish candle, this is called the bearish candle. And the reason I use green and red to identify it is because when you go to your TradingView or any platform, usually green represents up, going up, red represents going down, right? So that's basically what it means by bullish and bearish candle. A bullish candle is a candle that goes up, a bearish candle is a candle that goes down, right? But your key takeaway from this particular illustration is that a candle has what? Let me write this down. A candle has two parts, essentially, right? And what are the two parts? Number one, a body, and number two, a wick, right? That's anatomically. Keep in mind, this is what it does have. So you can screenshot this if you want. So going further, now what is the difference? How do you know the difference between a bullish and bearish candle? Because it's not just about the colors, right? Like in my charts, I don't actually use green and red. So how do you know the difference between a bullish and a bearish candle? So let's go further. So the difference between bullish and bearish candle. Now, like I said earlier on, a bullish candle is a candle that goes up. A bearish candle is a candle that goes down. So when we say bullish candle, right, we mean a candle that opens, right? As you can see here, it opens. So assuming this is when the candle begins, right? So it opens here, it goes and closes. So it closes higher than the price at which it's opened. Imagine this is 1,000 naira, right? It opened at 1,000 naira and then goes and closes at 1,200. So it closed higher at a higher price. That is a bullish candle. While a bearish candle is a candle that open, right, and closes below the price at which it opened. So imagine this is the beginning of the candle. It opens here and then it goes and closes below the price at which it's opened, right? As you can see here, we have 1.07468 closed lower, right? So that's a bearish candle. So bullish candle is one that closes above its opening price, right? And a bearish candle is a candle that closes below its opening price. Now other key takeaway. So let's just write this down first of all. So bullish candle, right, closes above its opening price. Let's keep this over here. That's key feature number one. Let's give it the green color. Increase the size a little bit. While this one, it closes below its opening price. Let's give it red. Okay. Now another thing to note, you're probably wondering, these wicks we talked about in the previous slide, what are they about, right? What exactly is this week? So now imagine this scenario. When this bullish candle opens here, right, it's not just expected that it will just go and then close at exactly where the final closing price is, right? There has to be some movements, because assuming this is 3 o'clock, right, it's 3 o'clock, this candle opens, of course there will be some movements in the charts. You see it going up, you see it going down. So now these wicks are formed by the high and the low of the candle. So this bullish candle opens here, right? Let's say before it goes up, it now trades lower, right, to form the low of the candle, and then continues going higher, right? And then before it come and closes, it reached a particular high point and then went back down and closed. Now the lowest price it reached, right, the difference between this open and this low, right, that's what forms the wick. Because since it's a bullish candle, right, you don't expect to see part of this body also here. So that's what forms the wick, right? So this is the low, this is the lowest the bullish candle went, while this is the high, this is the highest the bullish candle went. I don't know if you understand. I think you do, right? So let me just go over it again. So this is a bullish candle, right? And we said a bullish candle closes above its opening price. So instead of just going, because these candles, they have different kind of, they have flux, right, in the sense that they move up and down within minutes, within seconds, right, depending on the time frame you're on. So assuming this candle opened 3 o'clock, right, before it went and closed, it had different kind of movements in price. Assuming it opened at 300 naira, it probably went low to 250, went high to 450, and then finally went and closed on what, let's say 350 if it opened at 300, right? So that's a bullish candle. So the closing price is above, right, and then the opening price is below. Now a bearish candle, however, we said it opens above, right, and closes below its opening price. That's its characteristics. So let me just use this, right? So we open here, right, let's say 330, right? So let's say this was a 30-minute candle, right? So after 30 minutes, this one has closed here. So let me do this over here. So let's say this was 3 o'clock. Doesn't matter whether it's AM or PM, guys. It's an illustration. So I'm not saying a bullish candle is always 3 to 330, right? It's an illustration. So assuming this is a 30 minutes candle, so that means you're on the 30 minutes time frame. So this is what you should not get to understand. If they say you're on the 1 hour time frame, that means each candle is 1 hour. If they say you're on the 30 minutes candle, that means each candle is what, 30 minutes. So whatever time frame you're on indicates the duration of a single candle. So this indicates that you're on a 30 minutes time frame, right? So 30 minutes time frame. Let me put this in the bracket. 30 minutes time frame, right? So that means by 3:30 another candle begins. Now assuming this 3:30 candle is now a bearish candle, that means it opens at what, the price that this candle closed at, because now this is a bullish candle, right? So it opened, went and closed here, formed high, formed low, and closed here, right? So when it closes, a bearish candle will start, a candle will start again automatically. Now assuming that candle traded and reached a particular price that it never reached back again, right? So it forms the high of the candle, then now trades lower, right? Goes and form the low of the candle, right? It goes to a low point that it never returns to, and then finally it goes and closes by what, 4 o'clock, because this was 3 to 3:30, right? That's a 30 minutes candle on 30 minute time frame. Why this one from 3:30? This one is from 3:30 to 4 o'clock. Remember, guys, we are on the 30 minutes time frame based on this illustration I'm giving you guys. We're on the 30 minutes time frame, which means each candle represents 30 minutes, right? So this candle was opened at 3 o'clock here, right? Traded low to form the low of the candle, traded high to form the high of the candle, and then finally closed at a particular price, right, at 3:30. Then this one by 3:30 it opened, traded to a particular point at which it never returned to form the high of the candle, traded below again to form the low of the candle, and then finally closed below the opening price to form a bearish candle. And this was from 3:30 to 4 o'clock. So that is essentially how candlesticks work. If there's any questions, leave it for me below. I think that's that for now on candlesticks. So we'll be going forward in the next video. See you guys there. Okay, before we go, I wanted to show you how this looks like on the chart. So now if you're new to trading, you're probably wondering, okay, how do I know which one is bullish, which one is bearish here, right? Especially because I'm using different colors from the blue and red, the green and red, sorry. So over here on TradingView, you see OHLC. That means open, high, low, and close, right? So when you're moving, now I'm on this candle, right? You see that the open says 1.09989, right? While the close says 1.1. That 1 is already indicating that this is a bullish candle, right? Because this is 0.9989 is a lower price than 1.10034. So this is a bullish candle. This black one is a bearish candle. This black one is a bearish candle. So the open, high, low, close concept I talked about in the slide earlier is basically what's being indicated here, right? So this open, high, low, close values will actually be pretty important later on as we go further and progress in our technical analysis series. So stay tuned, and I think that's that for now. So okay, now we're on the 15 minutes time frame, right? As you can see here, 15 minutes, which means each of these candles is 15 minutes. As you can see, this one is 9 o'clock, right? Okay, let me come down over here. So as you can see, this says 9 o'clock, right? The next one says what? 9:15. So that's because we're on the 15 minutes time frame. If I move to the 1 hour time frame, right? Now this candle says what? 6 o'clock. Just look below, right? It says 6 o'clock. What does the next candle say? 7 o'clock. That's because we're on the 1 hour time frame. So whatever time frame you are in indicates the duration of each candle. If I move to the daily time frame, right? If I move to the daily time frame, then each candle is 24 hours, right? It's 1 day. So this is what? December 14th. This is what? December 15th. So that's what it means. The time frame you're on indicates the duration of that single candle. So that means that, for example, when we're on the daily time frame, right, there are multiple candles inside this daily candle. There are, within this daily candle, there are 24 1 hour candles, right? There are what? There are 6 4 hour candles, right? If you move to the 4 hour time frame, so there are 6 4 hour candles. There are, you get what I mean, right? So there are multiple time frames just within this. There are multiple candles just within this particular candle. If you move to the daily, now if I set this 2 on this, right, this is the beginning of December 15th, and I move to the 1 hour, you see that in between here and here there are 24 candles, right? That's for 24 hours. So each daily candle has a 24-hour candle, has 24 1 hour candles. Each 4 hour candle, if we move to the 4 hour time frame, each 4 hour candle has 4 1 hour candles, right? So I hope you get this concept. So moving on, we're going to be diving deeper into technical analysis in the next video.